Okay, the question is backtesting. Trading, investing, backtesting. Now, I'm aware that there's a lot of people out there who are not exactly, mathematical experts. They're not experts at Excel or running Python or any other language or scripting language that's going to be able to backtest a strategy, within seconds. So what I'm going to show you in this video actually is essentially a super quick way that I believe you can backtest, or at least just get a sense of backtesting. Now, first of all, backtesting is looking back at the past and then trying to figure out if what's happening now would work again today or maybe repeat again today. What are the odds of it happening again today? That's what backtesting is. You look back at the past and then you ask yourself, how many times did it happen? Was it successful? Is there any statistical evidence that it might lead us to making a better decision in the future? And that's what I'm going to show you. So this is a chart of the Russell 2000 IWM ETF. And I'm going to delete all these drawings, but they are the basics of this simple backtest. This is a really easy way to backtest. And it's not perfect science, by the way, but it's better than nothing. Anyone can backtest like this in markets. So I have a chart of the Russell 2000, and I've added this blue line here, which turns out is a 50-day moving average. And in this backtest example, I just want to quickly see if it's ever good to buy below the 50-day moving average. So all I have to do on this chart is I have my 50-day moving average line added here, and then I can circle the points where the 50-day moving average was tested. So we have this point here, this point here, this point here, this whole area here, this here, and even this here. And I could go back in time and do this over the last year, 2 years, 3 years. In this example, I just want to look at the beginning of this uptrend. So since this crash bottom here, I just want to look since this has happened since the crash. So remember, this is not a perfect science of backtesting, but like I said, it's better than nothing. If you're just getting started in markets, if you're interested in finding quick ways to backtest, you don't want to script anything, download data to a spreadsheet, well, you can just do this. You can sort of do your rough analysis on a chart. So I've circled these moments and I can count now. So I can go ahead and count. I see 1. And what we can do is just copy this now. 1, this would be 2. We're just going to walk through this slowly. This next point in time would be 3. So we've got 3 points now. And then this next point would be 4. So we can do 4 times. And then this next point, you can see I'm just copying and pasting these numbers, would be 5. And that means today, at the time of this video, yep, you guessed it, this is the 6th time. So in this really simple backtest study, what we've noticed is the 50-day moving average on this chart has now been tested 6 times since this really epic crash. Okay, now we want to look at this and learn a little bit more about this backtest. So what we want to see is how long did price test this line before breaking out to a new high? Well, on certain, programs, and this is tradingview.com, we can just use this date range tool. So we see it tested actually here. It was only a 2-day event. If you look, it was only tested for 2 days. Kind of wild. This is only 2 days. Let's continue this. Here it looks like here's 1, 2, 3, 4, 5. It was about 5 days. So we can do this. And that's 5 days. Drag this down a little. Here we can see it was a little bit longer, and it looks like it started back here and proceeded all the way. Well, this actually could probably be 2 separate moments because it tested it actually here. So it tested it here, bounced, and then it broke through again. So, I mean, you almost could say, depending on how you want to define the study in this example, maybe it's 7 times, but for the point of this video, let's just call this one big cluster. And it tested it here, and it didn't break out to new highs until about here. So that's 31 days. Well, that's interesting. And we can just continue onward. Tested it here, broke out to new highs here. That's 6 days. Let's just move this down here. And then it tested it here, broke out to new highs about there. That's another 6 days. So this is a really rough way to backtest, but if you're trying to trade off of indicators or learn about a strategy or just make better decisions about, your market decisions, this is better than nothing. So if you're just buying blindly or whatever, maybe it works for you actually. But if you actually want to look into, the price action and look into some sort of basic, historical moments in market history and draw some simple stats up, you can do this. So now as you can see, what we have 4 days, 5 days, 31 days, 6 days, and 6 days. What's cool about this is we actually see if we remove this outlier of 31 days, we can see that on average it's about 4 plus 5 is 9 plus 6 is 15 plus another 6 is 21. So we have 21 total days, but let's remove this outlier. So that's 1, 2, 3, 4. And we can do 21 divided by 4, which is about 5. So it's on average, since this big crash, the 50-day moving average has been tested, and it's been tested for about 5 days. So should you buy this dip? That's now the question. Is this a trade you want to take? Do you want to buy this area here? The answer is we're on day 2. There's no rush. So now what we can do if we want to continue to backtest these events is now we can study the drawdown. How far does it normally go? Well, we can look at sort of, from this event to this low, it's about 8%. And we can just sort of get a feel for sort of the start of the drop in each instance all the way down to the absolute low. So now we have 8%, 7%, 10%. Let's just see here. This is about 5.7%. And then this is about 11%. So now you kind of get the averages as well, and you could add these up. 8 plus 7 plus 10 plus 5 plus 11. And you can kind of start to see that also if you move the outliers of 11%, 10%, your average, or even with them added, your average is going to be around 8 or 9%. So now that we have done that, what we can do is measure the distance in this existing drop. Let's just see. We're at about 6% from here. From the absolute top, we're at about 8%. Really interesting. So we're on day 2 when the average is normally 5. And we're at about, you could say anywhere from 6 to 8% depending on where you measure from, which is at the average. So you see where we're going here now. Now we can start to think, do we want to buy now? And this is the basics of just doing a rough backtest. What I love about this approach and why I wanted to teach it really quick or just share it out loud, it's like I said, it doesn't require any complex formulas or mathematical approaches. You don't have to write a script out, download the data into an Excel spreadsheet. You can just draw it out, sketch it out. Now, it's not a perfect science. That's what's really important, though, to say again about this. This is not a perfect science. We are just sketching it out. However, if you don't have the time to, actually run a formula to get the exact data, this is helpful. And I personally do this a lot. It's fast, it's easy, and it can just sort of get me thinking, is this a trade I want to make? And also, maybe this is something now I should study deeper. Maybe now I should download this data to a spreadsheet and crunch some numbers. So just to do another quick example, why don't we open up a chart of, why don't we go ahead and do Amazon? So we can open up a chart of Amazon, and what we can do on this chart now is we can try different indicator. Now this video is primarily technicals. As you can see, I did moving average. Now I'm going to do another indicator, and then this indicator, what I'll do is I'll add some Bollinger Bands, and then I'll double click, and I'm going to change this a little longer, 50. I want 50-day moving average on this. Colors look good. Standard deviation is 2. Perfect. So now what I want to see now is I want to look at every time Amazon got close or tested the bottom of these Bollinger Bands, a 2 standard deviation move away from its 50-day moving average, and just get some idea. Well, this is actually the March crash, so we want to ignore this because this to us is such an outlier. This was the COVID-19 crash. This data is going to be really hard to look into. It's a moment unlike anything else. Lots of news, events, you name it. Whereas this data now is a little more, you could almost say, structured. You know, it's a more normal market to some degree. And what I've done is I've just circled the 3 points, and now I can go in and quickly study them. And what I want to look for in this example is how long can I expect this bounce to hold? So do I want to chase price here, or do I want to wait maybe for it to retest? And what I can quickly do is, once again, do a date and price range study. So from the bottom to the top, I want to study the time and price from two standard deviations below to 2 standard deviations below to 2 standard deviations above. So I can do the same thing. Now this is only, what's really important here is this is only 2 points in time we have to study from, and that's never good. You definitely, when you do these studies, especially when you're drawing them, you want to make sure you have at least 3 or 4. 2 can be, now markets are random in general, but 2 just isn't going to give you enough data to truly, it's just not enough. 2, 3 or 4, 5, 6 is a much, there's more data to work with. There's more price action to study. Regardless, in this video, we can just quickly examine. So it's a 15% move in only 4 days. It's a 20% move in 21 days. Now, it's important to note it didn't hit the top here either. So let's see where we are now. Off these lows to the point now, we're already at 19 days and 7%. So this is probably something we don't want to go near at the moment. And why am I saying that? Well, that's how doing this study can also help. Just sketching it out like this, because now you can say, I don't like the way price action is working. I don't have enough data to make a trade. And I also don't really like the pattern or the repetition. I'm looking for more signal I'm just looking for more data, more repetition. It's other people to be examining the same trade. And to me, just by doing this, I'm not interested. There's just not enough data here. It's not conclusive. And I don't even want to examine it any further. I could download this to a spreadsheet and really, get some more concrete facts, but just by eyeballing it, not something I feel like studying. So that's really why I wanted to make this video, by the way. I hope that it helps you get started, and it's just a simple way to backtest your trades. Do not overcomplicate it. This is probably one of the simplest ways I know how to backtest. It does not require a ton of time. But remember, and this is so important, I'm saying this because I know that there's a lot of smart people out there who actually can run these back tests in seconds and get the exact numbers to have the logic defined. So I'm saying this with, I'm trying to be really clear here. This is just a sketch tool for getting the back test process started. And for those who don't have a lot of time on their hands, this can be a faster way to backtest rather than learning a new language or finding out how to get this data into a spreadsheet. You can just mark it out and draw it out and study each point in time. And that's who the video is made for. And for me personally, I work as well, a full-time job. I just trade on the side when I have time. And this fits my time frame really. And technology has made this possible. Some people didn't have this technology just 5, 10, 15 years ago. And it's a game changer really, because if you're like me and you work a job and you just want to do some quick back tests, not run an entire program on Excel, this is an option. So I appreciate you guys watching this video. I hope you enjoyed it. Please leave any comments or questions below. Subscribe as well. Just get my channel started. And yeah, thanks for tuning in.